Hey guys, welcome to the Stock Market Starters YouTube channel. Today, I'm super excited because we are jumping into some actual investment analysis with a real life example. And we're looking at stock number one of six that I'm going to be looking at over the next couple of weeks to, dig into, to look at the fundamentals, look at the technicals, and decide whether or not any of these six would be good investment opportunities. So today we are starting off with Ford. We are going to move on throughout the next couple weeks to KHC, to Verizon, to GM, to Main, and to Home Depot. Now I know I just used a mix there of regular company names and of what's called ticker symbols. So if you're not, confident with the stock market, you don't know what ticker symbols are, go check out my course, figure it out. But what's really cool is that over the next couple of weeks, I'm going to be talking about each one of these stocks and looking at the actual fundamentals. What do I consider when I'm looking at getting into a new investment? So if you want to find out more about those videos, subscribe to the channel, hit that notification bell so you know when those videos drop. And until then, let's jump on in. So as I said, today we are starting with Ford, which is F on the ticker symbol. So let me show you guys what the chart looks like, and then we'll jump into the fundamentals. So here is the Ford chart. This is showing 1 year of time on a daily chart. And as you can see, Ford has moved up a whole lot in the last year, and then it's dropped a lot in the last year. Now, this big drop is from two things. It's from one, earnings, and from two, the S&P got very, very negative for a while. So that's what caused this drop, and that's kind of what made me think, along with a couple other key factors, that I should be looking at Ford as a potential investment opportunity. Now you can see some other things on the chart here, like this 15-cent dividend that they pay quarterly, right? That's another thing that has me interested. But this is what it looks like on the daily chart. I also want to show you what it looks like if we look at 3 years, where each of these candlesticks is 1 week of time. So as you can see, we had this huge run up. The high in the last 3 years was up at 25.87. So big high, then we've dropped. Now we are in this longer term downtrend that we've been riding in for the last, 2.5 years. And what's really interesting about this to me is, after this drop, we're pretty much into the bottom of this downtrend. Also flat with this low, just got below it, but basically flat with this wick low from back here last year. And what's interesting about that is, after these touches on the bottom, we've gotten some runs up. Last year, we certainly got a big run up. I'm wondering if we've got another run up here in the future. So something I want to consider. And, being in a long-term, and by long-term, I mean, couple of year gradual downtrend, to me, this is not the end of the world. Because when I think about Ford Motor Company, I think, this company's been around for a long, long time, building cars forever. They're looking at electric vehicles and all this other stuff now. I don't expect that Ford is going to disappear. And so that to me means, okay, they pay an interesting dividend. They're not likely to disappear. I know that it's a very, very well traded stock. I've traded Ford a bunch, right? You can see I've traded it here in my example account. Um, so, right, Ford is something that I would like to consider. And so I know, hey, that's interesting. It's got a big drop. That means that it has, some potential, maybe for a run up here into the next couple of years. So kind of an interesting little look here. Switch back to my daily, right? You can see how dramatic this looks here. I mean, from this high down to this low. You know what? Let me show it on the other side. That was a, let's see, 36.31% drop roughly. So big drop here. But when people, are running scared, that's often the time to get in. Not always, but makes me think, hey, maybe this is worth considering. So I put together, that's kind of the technicals, right? I see where we're at, see what we're looking at. So from that, I went and put together a list of things that I'd like to consider when I look at the fundamentals of the company. So we'll go through each of these. I talked through a lot of this stuff, in recent videos. I've been talking about it a lot in shorts and that sort of thing. So hopefully you guys know what this is. If not, then, go watch those, check it out, figure out what they are. Quick Google search will tell you too. But, let's go through these. So there's a few things I want to look at. One is, market cap. I also want to look at EV or enterprise value. I want to look at beta. I want to look at the PE and PEG ratios. I want to look at EPS or earnings per share. I want to look at the dividend yield, right? How much are they going to pay me in the dividend? I want to look at the EBITDA, earnings before interest, taxes, depreciation, and amortization, right? How much is the company bringing in? And then I want to look at their revenues all the way back to 2020, going through 2023 and then TTM revenue, which is trailing 12 months. That's how people a lot of times look at, hey, it's not, we don't have 2024 revenues in yet, but in the last 12 months, what have we run in? So these are kind of some of the things that I want to look at. So we'll kind of go through these, right? We'll pull up some information. We'll go through these and see what kind of picture this stock ends up painting. So first, we are looking for market cap. And when I look for a lot of these things, I'll a lot of times go to Yahoo Finance. You can use Google Finance or, I don't know, Bing Finance or wherever, right? There's a lot of places you can get this information, but I like finance.yahoo.com. It just, it's one that I've used. Certainly no particular preference to this over any others, but this one I use, I kind of know where most of the stuff is. So we are looking at Ford, so I can look up either Ford, right? You can see Ford, but Ford Motor Company is the one we're looking for. F. You can also just look it up by the ticker symbol F. But we can see on the summary here, we've got a bunch of information. I don't care about a whole lot of this, right? This type of charting, this line chart, is not my favorite type of chart. It's showing just today's price action too, so that's interesting to note, right? We can look at year to date. Hey, this is what's happened in the last year, right? There's that big drop that we were looking at on our chart over here, right? Boom, there's that same drop. It's just shown a little bit of a different way. But this is not really at all what I care about right here. What I'm interested in first is market cap, right? What is Ford's market cap? So I'm gonna look at market cap. Now it's showing intraday. That's just saying, hey, the market cap like right now today. So that's fine. But we're looking at 42.853 billion. 42.853 billion, right? Big number, but that's a big company. So, hey, big company, big market cap. Next thing I want to look at is EV, or enterprise value. Now, enterprise value is not shown right here. That is shown, however, on the statistics, and it's shown as of yesterday, right? 8/20/2024 was yesterday. Enterprise value here, boom, 160.78 billion. You can also see the market cap, if you'll notice, is very it's slightly different because this is taken as of yesterday instead of as of the current moment today. But we'll take the enterprise value from yesterday, so that's fine. And 160.78 billion. 60.78. Oh, what happened? 100. Oh, give me a minute. My keyboard disconnected. 160.78 billion. So, right, we've got market cap, we've got EV. We can see, hey, this company is valued in the billions, and not only billions, but tens of billions and even hundreds of billions. So, big company. There's not surprising, right? Ford is a massive company. So next thing I want to look at is beta. Beta, we can come back up here to the summary, and we can see beta. It's showing a 5-year monthly, which is telling us how they, or what numbers they use to come up with that beta, right? But their beta is 1.63. 1.63. So that tells us, right, if the market moves up $1, or rather 1%, we expect Ford will probably move up 1.63%. Same thing, if the market falls 1%, we expect Ford might fall 1.63%. And that doesn't necessarily mean it's going to happen every single time. But, in the last 5 years, looking at a monthly data set, that's kind of what that's shown to be. Next, we want to see the PE ratio. PE ratio, we're seeing a PE ratio TTM, so again, trailing 12 months, and we are seeing 11.23. 11.23. So that means, right, that the price to earnings ratio is $11.23. So, per share, the current stock price, you're going to pay $11.23 per $1 of company's earnings. So that's kind of what that tells us. We also want the PEG ratio, which we can see is not right here. So the question is, hey, is it in our summary? And there it is. PEG ratio, 5-year expected, and that is 0.59, right? So 0.59 is our PEG ratio, 5-year expected, which is kind of cool to see. You can also see the trailing PE. That's what that means, is taking previous PE numbers. We got 11.12. You can also see the forward PE. That's based on looking at future earnings estimates. So that's saying, hey, the expected earnings to price ratio is expected to drop, meaning you're going to pay less per dollar of earnings. which is kind of cool because it means either that the stock price is going to drop, so you're going to pay less for the same earnings, or really what they're talking about here is expected earnings are likely to grow, right? Earnings in the future are expected to go up in this case. So what you expect is that the price is going to drop per dollar of earnings, so you're going to have more earnings at the same price. So anyway, forward PE I don't really use because it's less data oriented in terms of looking at past data, and it uses future projections, which is fine, but there's a whole bunch of ways to come to those numbers. So I like to use the trailing, which here is 11.12, very, very similar to the daily PE ratio, right? 11.2. So, right, just a little bit of difference based on the change in price today from yesterday. But that's what that is. So, got a 0.59 PEG. That's pretty cool. And you know what's interesting too is you don't have to look in one spot for all these, right? You could just look up Ford PEG ratio, right? And see, hey, what do we find? So as of June 17th, it was 0.76. Here's some other information about it. Boom. 5-year expected PEG is 0.58. So again, that 5-year expected is saying, hey, expected, that's what we're seeing, and then what we expect to be the case. So kind of interesting. But Yahoo Finance has it all, so I kind of tend to look there. But that's fine. So next up, we're looking at EPS, earnings per share. And EPS, we find right here, trailing 12 months, EPS 0.96. 0.96. So again, that means earnings per share for each share that is out there, right? Each share of stock outstanding, the company earned about 96 cents. So kind of cool to see. Next is dividend yield. Now, dividend yield, forward dividend yield. I always look right here. That's perfectly fine. This tells you two things right here. It tells you 0.60, which is saying 60 cents is the expected dividend payment over the next year, right? So each year, Ford is expected to pay about 60 cents, which is 15 cents times 4, right? Which we can see the 15-cent quarterly dividend being paid here. There's 4 quarters in a year, so there's 60 cents. That's giving about a 5.62% expected return according to where the stock is right now today. So 5.62 is what I'll put as my dividend yield, right? 5.62. Perfect. And then we want to look next at EBITDA. So EBITDA is not right here. EBITDA actually is somewhere else. For EBITDA, I go to financials on the left here, and then to the income statement. And this is actually really cool because on Yahoo Finance, you can see income statement, balance sheet, and cash flow, and you can see a lot of really interesting information. And as you can see, there's the trailing 12 months, and it goes back through 2022. So it goes back a little while. Basically, it shows the last 4 and current year, last 4 years plus current year. So that's pretty cool. But EBITDA is partway down. It's right here, earnings before interest, tax, depreciation, and amortization. So 11,166,000. So we can copy that. We can paste it. Also, be aware this is in thousands. So if we want to find EBITDA, we do equals 1,000 times value that we had. And that does not mean minus. That means times the value we had. And what's the difference? Oh, yeah, they don't like the commas in Excel. Perfect. So what number is this? That's the question. Let's, boom, make it comma separated. Let's get rid of our zeros. Oops, wrong way. Zeros, boom. So this is, $11,166,000,000 dollars of earnings before interest, taxes, depreciation. So we could say, leave it at that. We could also put, 11.166 billion. 166 billion, right? Keep our numbers the same as of what we've seen here. So that's kind of cool. Next, I want to look at revenue, and I've got revenue all the way through 2022 up through current yearly revenue shown because that's what I want to look at. So 2020 revenue we can find again on the income statement under the financials, and we can see total revenue versus operating revenue, and they're showing the same. Honestly, total revenue is perfectly fine for what we are looking at here for what I'm considering. So, right, we can do this, and honestly, I will just keep the numbers that it's showing because in terms of revenue, I like to look at not the actual number, but I want to look at the comparison, right? I want to be able to look at revenue and see if there is a trend that I can catch. That's the reason that I look at revenue. Other people might look at it for other things, right? And say, hey, what's the actual revenue doing? What's their number of revenue? You might compare it to others within certain industries. So we'll see, when I look at GM, right, that's another car manufacturer. And then we can compare, hey, how does their revenue compare to Ford's revenue? And we can compare them and say, hey, which one of these two companies might be the better investment? But for Ford today, I want to just look at revenue trends, and that's all fine. I don't want to do size 14, size 12, and what are we looking at? A Patos narrow, that's fine. Just making it look nice. Here, not really terribly important, but make our numbers all kind of look the same. So that's fine. Right now we've got our numbers. That's perfect. It's in number format. Boom, pop it there. Get rid of those zeros. Boom. Right. So now we've got revenues from 2020 through current. Now, the other interesting thing that I like to do with revenues in particular is I will say, oh, hey, here's Ford. Let's look at what these revenues look like graphed out, because we can see, hey, we're kind of going up, like we're getting higher numbers of revenue, but let's graph this and actually see, which is kind of cool because that's actually really easy to do. All we do is select it and go to insert, make a simple graph on chart, and oops, not do that. Let's move it right down here so it's sitting below, and then we can see chart title. We can rename it and say Ford earnings trend. Perfect, right? Perfect. So then we can see Ford, its earnings has clearly been climbing over the last really, 4.5, but really, over the last 5 years, we're seeing Ford has had higher earnings. And if I can spell earnings right in my title, that would be cool. ARNINGS. Perfect. So Ford earnings trend, we can see that earnings have been trending up, which is certainly not to say that they will always continue up in the future. But over the last 5 years, they've been making good earnings. That tells us, hey, they're able to bring in more money year over year, and we might expect that to continue. So this is kind of what I look at. And then I would look and say, okay, cool. So here's my information on Ford. Perfect. Now I've done a bit of an investment analysis. I've got all this data. What does it actually mean, right? That's the real question, is what does it actually mean? So we can see market cap, they've got plenty of money. Really, all I look at on market cap and an EV, really, I mean, these are valuation, right? How much should the company be worth overall? And so, their market cap, current market price, it should be worth 42, let's just say $43 billion, right? Huge company. Great. EV, enterprise value, it considers debt, it considers cash holdings. They're saying that, hey, EV, it's worth even more than what the market cap would say. So we're saying, all right, this company is worth somewhere, between 42 and $160 billion, roughly estimated. All I care about in that, as far as, I'm concerned, right? You can compare it to other companies. That's useful. Right? We'll see what that looks like when we look at GM and some of these other companies we're looking at. But you can see, hey, how does this compare to other companies in the industry? So, we might look at Ford or Audi or GM or, whatever other car companies. And we could say, hey, how much are these companies worth? Which company is bigger, right? And that's how that comparison becomes useful. As far as I'm looking at it, I just want to say, is it a big enough company that I'm not worried about it going out of business, right? That I'm saying, hey, do all these things make me think that the company is going to keep going up in value. And the market cap and EV, they're basically saying, hey, this is a huge company. It's good for comparison, but for the time being, I'm going to say, you know what? That's good, right? That is perfectly fine for what I'm seeing right now. And to be perfectly honest, I think that that, as far as I'm concerned, is good enough for the time being to say, hey, it's a big company. I don't want to be buying into something where the total value of the company is only, $100 million when they've got tons and tons of shares outstanding and all this stuff. But we're saying, hey, this is a plenty big company. I don't think it's going to go bankrupt. I don't think Ford is going anywhere. So good. Market cap, EV, it's a big enough company. Beta, right? How much does the overall market change this stock? And we're saying, hey, you know what? If the market moves $1, or rather 1%, then we expect that, Ford will probably move 1.63%. That seems reasonable to me, right? I'm not taking tons of volatility risk, where, if you had a beta of like 5, you'd say, hey, if the stock market moves 5%, we're going to move 5 times that. We're going to move 25%. So a beta of 1.63 to me makes sense. That's fine. PE ratio, right? How much am I paying for a dollar of earnings? $11.23. Now, that seems a little high. I don't love that number just right off the bat, right? But again, this is kind of something where you compare it to industry averages and say, okay, what PE ratio actually makes sense? In terms of the industry, and this is where you get to comparative analysis. That's really helpful. That we'll do some more of as we get these other companies in here. But PEG ratio, price to earnings, considering future growth. If you just look it up, right? Let's do PEG ratio. And I want to show this because I want to show you what is a good PEG ratio, right? Investopedia says lower than 1 is pretty good. And higher than 1 means that it might be overvalued. But basically what this is saying is based on the current price earnings and expected growth rate, you're paying about 59 cents per dollar of expected future earnings based on the current earnings growth rate. So that's pretty good, right? You're saying, hey, it's expected to grow. There's a current price. There's a current earnings rate right now. I'm basically saying, hey, I'm paying, almost 60 cents, 59 cents per dollar of expected future earnings. So that's not bad, right? That's kind of cool. So that's actually a pretty good number. Next, we can see EPS, earnings per share, right? Again, the company is making just under $1 per share of stock. Again, that's kind of where your PE ratio, you can see how this makes sense, right? It's $11.23 per dollar of stock that you buy, and EPS is just under 1. You might notice that the stock price is almost at $11, right? 10.82. So you can see those kind of make sense together, which is kind of cool to see. See dividend yield, right? And I can make this a boom percent, but I actually want it to be 5.62%. And then I want to actually show it. It would be cool. There you go. But we're saying, okay, so if I buy this stock right now today, I know that over the next year, I'm likely to be paid a dividend of about 5.62%. And that's going to be about 60 cents per share, right? So that's kind of cool to see. Hey, look, I'm going to get that return just for owning the stock, notwithstanding what the stock does, which means if the stock drops 25%, my actual return is going to be, a 19.38% drop because it's offset by that 5%. On the flip side, if the stock moves up 25% over the next year, I know, hey, my actual return is going to be over 30% because I got that bump from the dividend yield. So that's kind of cool. EBITDA, we're saying, hey, how much is the company earning? They're earning, $11.166 billion before taking out those expenses. That's kind of cool. Again, this is a good comparative number that you'll compare across industries and across specific companies to see, hey, what's better? And then revenue, we know revenue has been going up over the last few years, meaning the company is understanding how to bring in more money. So from what I'm seeing here, this looks pretty good, right? This looks okay. Now, a lot of these numbers are comparative numbers, right? So as we get, our KHCs and our GMs and our Home Depots in here, we'll be able to see what some of these numbers actually look like compared to other companies. But this is what I look at when I look at fundamental investment analysis. So kind of cool. So if I consider it, I say, all right, does this investment make sense to me? And I say, you know what? I think this does kind of make sense. I've got a little bit of money to invest. I've got some things going on. And I've done some fundamental analysis. The company seems like it's making good money, right? It's earning good money. It's got good revenues. Earnings per share kind of, makes sense. They're in line. I understand the PE ratio. I understand beta. That doesn't seem too outlandish to me, right? The PEG ratio in particular, I actually really like because it's telling me that what I'm paying now is, less than $1 per dollar of earnings we expect in the future. So that's pretty cool. I like the dividend yield at 5.62. You guys might not know this, but a standard dividend paying company, I sort of, roundabouts think of, hey, 4% is a pretty decent dividend yield. So anything over 4 to me is pretty appealing. Now we're at 5.62%. And that's pretty cool. There are other things to consider with dividends, like, hey, if a company's paying dividends, then that might mean that you're going to get better returns than they're going to make. So there are reasons to and not to get dividends. I like dividends because it's kind of cool. You can buy more stock with them, which I like the compounding impact of that. There's different tax considerations and all that with those too. But to me, this kind of makes sense. So I'm saying, hey, Ford overall picture, I think it kind of makes sense. Now, I'm not comparing it across the other companies yet, right? Today, I'm just talking about Ford. But from what I see, Ford makes sense. And, as an investment, not bad. So I'll save that, say, hey, you know what? I want to come back and compare it. But until then, from what I see, I kind of like it, right? And that said, I want to go and buy one share, and I'm going to only buy one share right now because I want to have some comparative investments to look at, right? We'll get a lot more clearer picture as we go in. But I want to buy one share and show you guys what that looks like in terms of actually buying. So, right, here's Ford. We see the price right now is at 1081, and I say, perfect. I'm going to hit this buy symbol. I'm going to say buy, and I'm going to pay attention, and I'm going to say, hey, you know what? I don't want to buy 100 shares of Ford. I want to buy one share of Ford. And I pretty much always do limit orders. You can do market orders, right? But I pretty much always do limit orders, so that's fine. Current price, the bid and the ask spread is 1 cent, so 1081 should get me in, and I will say confirm send. It'll show me these details, and I'll say, hey, look, I spent $10.81 on this trade, right? That's what cost my trade. And I'm gonna say perfect, send, boom. Now I got in. So I have one share of Ford at $10.81 in my account now as a long-term investment. So something I want to hold for a long time, right? Something I want to see if it can make money over time. Now, looking at the shorter term technicals, I would not be at all surprised to see this drop off the 20-day. That would kind of make a lot of sense to me with where the S&P is at. But, to show you guys, hey, how does this work? How do I buy it? Like, it's as simple as that, right? That's how you actually buy. And I know, hey, it's looking okay. Again, I'll compare it more to other stocks. Maybe I'll buy more. I certainly have more money to invest than $10. But kind of cool. I wanted to show you guys that, see what this looks like. And again, I'm going to be looking through these other 5 companies, and we'll do some comparative side-by-side analysis, look at what it looks like to maybe buy some of those other companies. And we'll kind of see what happens there. So kind of cool. Hopefully that makes sense. Hopefully, you guys got some ideas from this, see something interesting. Man, I just love this stuff. Just love it. So stay tuned for the next video. And next we will be looking at KHC, right? Just walking down the list. Next we'll be looking at KHC. So yeah, should be pretty cool. We'll see you guys in the next video. And until then, happy trading. Hopefully this was helpful. And of course, happy investing.